Good afternoon, everyone. Thank you for joining our webinar series this afternoon. My name is Tyson Mavar, one of the ExxonMobil focused retirement advisors for the retirement group in Texas. Today's webinar series, we have quite a bit to talk about as there's been quite a few changes coming out of ExxonMobil on a retirement planning side, as well as on a shareholder value side. And we've been getting many questions and concerns from our clients that are still working at ExxonMobil, as well as some of our clients that are retired from ExxonMobil. So I want to take an opportunity to address some of those concerns and give some of our opinions as well as some of the facts that we know today related to what's happening with ExxonMobil. Before we get into some of the content, I want to make sure everybody on today's call is aware the retirement group is not affiliated with nor endorsed by ExxonMobil. We're not affiliated with Voya. In fact, we actually happen to use Charles Schwab as a custodian. Our hope is that we can educate employees approaching retirement on their options with their benefits plans and help them to avoid all of the common mistakes that have people either paying too much in taxes or leaving money on the table with ExxonMobil when they leave the company. Our hope is that you consider doing some business with us when you retire, as we manage retirement assets for corporate employees in retirement. But first and foremost, we hope to be able to add some value to your retirement planning experience, whether or not you do any business with us, so that at least you have some good things to say about us among the ExxonMobil community before you leave the company. There's also a whole host of complimentary services and content pieces that we have available in our ExxonMobil retirement planning page, as well as our ExxonMobil interest rate blog and our retirement group ebook library that I want to make sure that everybody has access to and the availability to peruse at your own leisure, as we feel that there's content that will help you in every aspect of your retirement planning decision-making process. So whether it's estate planning, Social Security, benefit planning for ExxonMobil, investment planning, educating people on value investing, which is our philosophy at the retirement group. Taxes is where people get into the most trouble in retirement. And we have a lot of content pieces that we think will add some value if you have the time to read them, or you can also schedule a 15-minute consultation with one of our ExxonMobil focused advisors. And we also encourage people to download the ExxonMobil retirement guide that we've put together that goes into every relevant piece of information on the decision-making process that we've found in working with our clients as they approach and transition to retirement from ExxonMobil. So first up on today's conversation, what we want to talk about is the voluntary severance program that's been offered to retiree eligible employees. So up until November 20th, select retirement eligible employees will have an option to leave the company and get a 4-month severance package. Now you have to be eligible as of January 31st, which will also be your last day on the books if you choose to participate in this offer. And also if ExxonMobil chooses to accept you for this offer. They will be making decisions in December, right before the beginning of the month, on who is accepted, and you'll have to get your paperwork back by December 15th if you're accepted and you choose to participate in this offer to get the 4-month severance package and leave payroll by the end of January 2021. For employees that choose to accept this, you will also be able to participate in the first quarter lump sum interest rates, which, as you know, are the lowest in company history, producing the highest lump sums in the history of ExxonMobil paying a pension plan. And what we are not certain of yet is what the involuntary separation is going to look like that comes after the voluntary package. ExxonMobil has made it clear that it's possible that people may be losing their jobs next year on an involuntary basis. What they did suggest is that employees that are approaching retirement eligibility, age 52 to age 55, will not be at risk of losing their jobs. People that are under age 52 and not close to retirement eligibility by their definition will be potentially impacted by this involuntary separation. Now, what's not clear is whether or not retirees that pass up this voluntary separation package will potentially be at risk of losing their job in the future. Now, I have many clients that have spoken to their managers this week who had suggested that their jobs are not at risk, but personally, my own opinion is that it's possible that there could be retirement eligible employees that could also be potentially losing their job sometime in 2021, or maybe even later than 2021, depending on what happens in the next few weeks related to the bottom line of the company, revenues coming in from ExxonMobil, how effectively they can cut their expenses, which, part of this reduction in force is in an effort to reduce expenses. Whether or not they're going to have to change the dividend payout. As many of you know, ExxonMobil is paying out more than 10% dividend yield right now, which for a long period of time will not be sustainable, but it's potentially going to change what's going to happen next year related to the benefits plans. And that's what we're paying very close attention on. We've been hearing a lot of rumors from our clients that are still working with the company. What's going to happen to the pension plan next year? Is it possible that they could take away the lump sum option on the pension? Is it possible they could restructure the pension entirely? We've seen that happen quite often in the last several decades that we've been working with corporate employees, not just from ExxonMobil, but from a lot of the other oil and gas companies that we service in Texas and throughout the country that have to restructure benefits plans, and where ExxonMobil has been one of the most generous benefit packages for the last several decades. This has certainly been a challenging and unprecedented time for all of us, especially the oil and gas industry. So a lot of uncertainty still on the table here. Retirement Group is committed to helping people on a complementary basis understand their options and forecast different retirement dates. And what we found is this is helpful in becoming ready when they change the rules in a very short period of time. Just as many of you saw your company match to the 401k go away within the last month and a half. This is something that we want to be available for people to start to evaluate. How can we make good decisions in light of these changes, and how can we prepare for an uncertain future? Because we don't know, here we are Wednesday, November 5th, day after Election Day, and we still don't have a clear winner of who's going to be the president for the next 4 years. There's a lot of uncertainty with what's going to happen with taxes in the future, what's going to happen with the stock market in the future. So moral of the story, it's important to have somebody that you trust, not only is qualified to help you, but is interested in helping you figure out what the best steps are for your personal situation. Is it possible that maybe you should sell some ExxonMobil stock right now because you're over allocated? Absolutely, but we need to get to know your situation before we recommend that. On the other hand, we may also recommend you buy some ExxonMobil stock because it's very inexpensive right now. But everybody's a little bit different, and on these webinars, we do our best not to give blanket recommendations and statements, and it's important we get to know your overall situation, what your expenses are likely to be in retirement, how old you are right now, how many years of service you have, what resources you have, not just in your pension and 401k, but also maybe outside the ExxonMobil benefits plans. And we understand that best when we run the cash flow analysis, and we can start to identify things that you can do today to improve your position, to have more money in retirement, have a bigger retirement paycheck, minimize your taxes, and have the highest probability of a successful retirement plan. We have to run the cash flow analysis before we can do that. So we also wanted to talk a little bit about the interest rates. As many of you know, right now ExxonMobil is borrowing money to pay the dividend, as well as many other expenses that they have. But a silver lining is that interest rates are as low as they've ever been. Many of you know, in an effort to stimulate the economy this year, post-pandemic, the Federal Reserve put downward pressure on interest rates, and they do this by buying government bonds. This year, for the first time in history, they also did this by buying corporate bonds to put downward pressure on corporate bond interest rates. So this has made an impact not only on retirees, because now you're in an environment where the company has to give you the biggest lump sum they've ever paid out in the history of ExxonMobil, because corporate bond interest rates are as low as they are. And this of course, is for non-grandfathered employees. Grandfathered employees are still using the 30-year Treasury interest rate, which turns out it's still the lowest in company history for the first quarter at 1.25%. So there's been some silver lining on what's happened this year. Largest payouts on the pension plan. In addition to that, ExxonMobil is able to borrow a little bit cheaper, and that's part of how they've financed this year, issuing over $22 billion of corporate debt through fixed income instruments like bonds. And of course, who knows how low interest rates will continue and how long ExxonMobil will continue to be able to issue low interest rate corporate bonds. But the more debt that they take on, the lower quality these bonds become, or the higher risk these bonds have, and they may have to pay a risk premium going forward when issuing future debt. But when it comes to putting together a retirement plan, we have a lot of people that are planning to retire voluntarily just because of what's happened in the interest rate environment. So I'm going to pull up our interest rate blog. This is something that we update quarterly for people that we work with. And what you'll see here is that the first quarter interest rates are based on September and August corporate bond rates, and they put a blended corporate bond interest rate schedule together. The second segment rate is the most important of these three interest rates, and that's the one we follow the closest at the retirement group, and we recommend people pay the most attention to that are approaching retirement. If you're grandfathered, which means 63 years old with at least 23 years of service by the end of 2020, you're using the 30-year Treasury interest rate, which is an interest rate they update quarterly. They round it to the nearest quarter percentage point. And it was 1.25 in the fourth quarter and will remain 1.25 for the first quarter, which means you have to retire before March 31st and commence your benefit before March 31st so as to be able to get the highest lump sum in company history. Now, we don't know if interest rates are going up or down or potentially staying flat into the second quarter. Stay tuned. We will have good information on that for grandfathered employees by January 1st and for non-grandfathered employees sometime around the third week in January to figure out if you should change your retirement date, or if you've already chosen a retirement date, potentially change your commencement date on your pension. And there could be an instance where people that are clients of ours are retired. We may recommend you wait to take your pension because you may make some more money as a result of these changing interest rates. Now look what's happened since the fourth quarter of 2019. We saw a second segment rate of 3.64. Now in the first quarter of 2021, 2.27. That's a decrease of more than 1%. So you've probably seen somewhere between a 10 to 15% increase in your lump sum purely based on the interest rates going down. Of course, your pension is still growing based on accrual, based on more years of service. And even if ExxonMobil decided to freeze the pension plan in the future, you would still be entitled to what you have up to this point, the point that they freeze the pension, accrued. They can't take away a benefit based on ERISA law protections that you've already accrued. So we'll be paying very close attention to what happens with the benefits plans, also what happens to interest rates, but I can't stress enough, there's never been a more important time to put together and revisit your retirement plan than right now, at the end of 2020, not just because of the challenges that the company is facing, but also because this is a very popular time to take a lump sum, and it might be an opportunity that has a short window. So again, we're delighted to help you understand the benefits and detriments of different retirement dates, and also put together a stress test on your plan so that we're not over-promising and eventually under-delivering on what the returns on your portfolio are, what inflation is going forward, what tax rates are going to be. So we try to plan as conservatively as possible. So if anything, your reality is better than the plan that we put down on paper. We do that on a complimentary basis. We try to update that at least annually for our clients and for prospective clients that are approaching retirement and might be considering using us as a retirement advisory group. So please take advantage of all the complimentary services that we have available, as well as that are available to you throughout the country, as there's many qualified advisory groups, including Ernst & Young, who the company pays for, to help you ensure that you're not making any big mistakes in how you're allocated or how you're deciding to process your retirement decisions. So with that, we're going to wrap it up for the day. I know we had a lot of questions coming from folks, and I encourage you, if you have any specific questions, please call our home office. Our direct number is 800-900-5867. You can set up a meeting, whether it's a web meeting, an in-person meeting, or a phone consultation with one of our ExxonMobil focused advisors, and we'll do our best to help you out any way that we can. I'm going to drop a couple links, the first one being to this interest rate blog for anybody that has interest in getting an update on all of this information. And then as well as our retirement planning page for ExxonMobil employees, Encourage everybody to take a look at that. That's where you can download the complimentary ExxonMobil retirement guide that we've developed over the last couple of decades. We've worked with employees. And you can also peruse any of the on-demand webinars that we have on a variety of different topics from a variety of different advisors across the country that are committed to putting together the most valuable and relevant information possible for ExxonMobil employees that are approaching retirement. With that, I'm going to wrap it up for today. Appreciate everybody joining today's webinar series. Again, if you'd like to schedule a meeting or ask any specific questions, the number for the home office is 800-900-5867. And we hope to talk to you all again very soon. Thanks, folks.